Okay, well, we are going to do a quick demonstration on the internal loan pricing engine that we have here at Excel Mortgage Services. Basically, we have been using this for about a year now. Not everybody, because we did have also logins to Optimal Blue. But going forward, this is the pricing engine we will be using. It is called Lender Price. And with pricing engines, for one, they have a lot of our main lenders in them, but the lender itself has to be a part of Lender Price, the pricing engine that we're using, in order for us to see that pricing as well. So if a random lender that we have isn't a part of Lender Price, then we can't just add them in there easily. Now we can request it, and then they can reach out to that lender, and hopefully we can add them in there. So if you don't see some of the lenders, we're adding more and more all the time, but all of our correspondents are in there, with the exception of ARC home loans, and we are working on making sure that goes in there, which it should be in there very soon. Apparently, they've done whatever they needed to do to get that working. So in general, I just wanted you to let you know kind of how a pricing engine works. And here's the reality of a pricing engine. It is a tool to help you find out if there's eligibility on a loan and who is going to do it at the best price. So I don't look at it as it is absolutely it's that price right then and there. If there was a pricing change, well, the lender, let's say it was at Rocket. Well, Rocket's going to change their pricing first, and then it eventually goes over to the pricing engine, and that's any third-party pricing engine out there. So I always look at it as a great guide to tell me where I want to go with this loan as far as pricing and eligibility. Let's say you were looking for a low credit score FHA deal. Well, you can easily see which lenders will do these lower score ones and which ones stop at a 620 FICO score or whatever. So in general, it's a tool to help assist you of where you should be taking different loans. This pricing engine will do not only conventional conforming, high balance, jumbo, FHA, VA, USDA, all those kind of things, but it also does non-QM, and we're working on getting seconds in there as well, so you could get second pricing or HELOCs or whatever in the system as well. So look at it as a great tool. Now, I'm going to share my screen here, and we can kind of go over how to price out in the pricing engine. For one, so I always go directly to the URL, the website version of it. I don't go in directly through our LOS system, LendingPad. I don't go in directly through that system because basically when you have two different technologies trying to talk to each other, sometimes there's issues that come up. I look at it as I can put the FICO score in there, what the loan amount is, and what type of property it is, and easily be able to figure that out without having to go through LendingPad. Okay. The difference is if you go through LendingPad, it's going to take the information that you have in a file. I'll show you that. And it's going to pre-populate it in the fields, and then you can price out that way. So you can do it either way. I prefer to do it this way. So you'd go to teamerm.digitallending.com, and that's going to bring you to this login. You'll have your, a login at this site. And once you log in there, it's obviously going to get you into a default scenario. So we defaulted to a 80% loan to value, 760 FICO score in a primary residence, single family home. This happens to go to Southern California. I'm going to put it in Pleasanton, where I'm sitting right now. And then pricing. So let's go across from the top, from each section here is the way you should look at it. So you have borrower, okay? That's everything to do with the borrower itself, okay? What kind of FICO score do they have? What is their debt to income ratio? How much in reserves do they have? How many financed properties? Are they a U.S. citizen? Is it self-employed, first-time home buyers? So there's also additional features down here under this more borrower attributes, and you'll see that in each section. So if you click on this, you can open this up and see, hey, this is the monthly income we have in here, 16,667. We have monthly expenses of 5,333, and that's giving this 31.997 front and back. You can also put in trade line, credit history, mortgage history, all that kind of stuff. I would not do any of this to begin with. I want to make sure that it's very clear. Try not to try to limit yourself. Try to keep it as open as possible. And then once you receive results, now you can go in there and say, okay, I got results at whatever lender. Now I'm going to change it to the high DTI that let's say your borrower has. Let's say your borrower has a 50% DTI. Well, only some lenders are going to do that, even if AUS says it's okay. So, but the reason I'm saying this is to just keep it open, as wide open as possible. Don't get so granular with what your search is. So in this case, it automatically pre-populates this monthly income. And the reason for it is it's above the AMI, the area median income. So it's not going to bring in some of these programs that are niche programs for people that don't make, they make 80% of the AMI in that area and that type of thing. It's trying to just give you the most normal kind of programs out there, okay? So I wouldn't adjust anything here to begin with. You're going to go through and make sure, hey, if it's a conventional loan, or is it an FHA or a VA or USDA or whatever it is, 30-year fixed or an ARM, and you can search for both at the same time if you choose to. Obviously, you can search by years too, and all that kind of stuff with the term of the loan. Is it a purchase, refinance, cash out? Obviously. And then you have your purchase price, if it's a purchase, and your loan amount. And with this system, obviously, you can just change it by percentage. It's going to automatically bring in at a 90% loan to value. Hey, you're going to need private mortgage insurance. Is this borrower paid? Is it lender paid? So let's say it's borrower paid. We don't have the MI companies in there. We eventually will get that, but reality is that if it's this type of loan, it's probably going to Rocket, because Rocket has the best mortgage insurance out there in the business. So I would go directly into Rocket's site after I ran this, and I'd see what their mortgage insurance was. But let's just use this as a scenario: a 90% loan to value, 30-year fixed. We're going to say it's a primary residence. So that's the occupancy, property type, single family. Number of units, it's just one, it's detached, and it's in the zip code, which brings in Alameda County. Okay, so again, you start with the borrower part of it, go to the next section, loan information, go to the next section, property type information, okay, and then property characteristics. Really, our product characteristics, sorry about that. So what that is that how are you trying to search for this type of loan? Are you searching by price, by rate? And there's ways to do it. It automatically defaults to all AUS types. Again, I wouldn't limit yourself by saying, hey, I only want to look at Fannie or only Freddie or whatever. Just keep it at all and then worry about it later, okay? So if you're doing impounds, you can click that. If it's not a 30-day lock, obviously you can change that. Now up here under this, all rates and prices, that's the way I keep it. So you can search by a rate, you can search by a price, like a loan compensation, or you can search with a different format, essentially by price, or you can search by all rates and prices. That's what I search as, and I'll explain why. So when I press this, I'm not putting my compensation plan in here or anything like that. I'm going to leave it the way it is and just search this way. While it's searching, I'll explain why. So the reason for it is I'm trying to see everything that I can. And I don't want to look at just lenders that are at, let's say you had a 1.5% comp plan. I don't want to see lenders that are only at 1.5% or more. What if I want to charge the borrower a tiny little bit, like a couple basis points or 10 or 15 or 20 basis points or whatever, and get them a better rate? So I like to keep it as open as possible. So what this is doing is it's saying, hey, of the lenders that are in here that came up with eligibility on this type of loan, so a 90% loan, there were 533 different qualified mortgages that came up. There are non-traditional of 48, and there's probably some ineligible in there as well. So with that, it's just looking at who has the lowest rate on their rate sheet. Just imagine with the pricing engine, all it is rate sheets going in, giving it eligibility, and it's giving it pricing. So when you look at 5.750, EPN comes up with a 97.163. So essentially, it's 3 points to get that loan. Probably that's not a great idea right now. You're probably going to go closer to your comp plan. So let's say you had a 1.5% comp plan. And again, here at Excel Mortgage Services, we have loan officers, as low as really a point, up to 2.75 and everywhere in between that. So let's just use 1.5% for this scenario. So if I were to put in 1.5%, that would be 101.5, and that's the way most pricing is done, is 101 instead of 1.5%. 101.5, and I've just clicked off of this area. So under this price is where I'm doing that. If I clicked off of that, it's going to reshuffle the deck and say, okay, Next Bank has 101.609 at 7.125 in rate. They have 3 programs. There's 4 actually, because there's the one showing. So there's the other 3 in here. They may, there's specific things with each programs, but that's what that's saying here. It's telling you Next Bank is here. And then you go to 7.250, AmeriHome, Next Bank, and PRMG. Well, with it, they're saying at this price level, at 101.5 or better, there's only 3 lenders at 7.250. Now, when you get up to 7.375, you're going to see that there's a lot more lenders that start coming in because it's got to be above 1.5%. And that's why I'm saying in general, I wouldn't put this in at 1.5%. I want to see a little bit more information. So what I would do is I'd put it in at maybe 1%. And when I reshuffle the deck, it's going to show me, wow, I could get AmeriHome at 6.990 at 101.15. So we would have to charge the borrower essentially 35 basis points in order to meet your comp plan. So if your comp plan is 1.5%, I could give that person 6.990. I'm going to be getting in lender paid comp 101.15, let's say. And then when you lock that loan, the processing department's going to take a look at what your comp plan is, and they're going to say, hey, we need to add 35 basis points as a discount to the borrower, a charge to the borrower. And at that point, that meets your comp plan because we would be receiving 1.5% in total from this. 35 basis points really from the borrower and 101.15 from the lender. So I hope that makes sense. Now, in addition, if you get even a little bit closer, you can go to the 7%, and there's these different lenders that come in, all at 7%. We go 7.125, and it gets to this 101.690 that we were showing before. But also, AmeriHome is 101.49. Maybe I want to work with AmeriHome. That's essentially a 1.5% comp plan. But this is a good example. So AmeriHome didn't show up before because I put in 1.5%. So when you limit your view of rates, you're doing yourself a little bit of a disservice because you're not able to see exactly what's out there. So again, if you have a 2% comp plan, maybe you're searching at 1.5% if the borrower doesn't want to pay a lot for the loan. If it's a borrower paid transaction, then you're going to go really, if you go to 100, that's going to bring in only loans at 100 or more. So in this case, PennyMac, 6.624, they come in at 20 basis points above par. So again, I wouldn't do it at 100. If I was just charging and I didn't want to give any credit to the borrower, I would go down to 99.5. When I do that, it's going to bring in rates that might get a little closer. Maybe I go, maybe it makes more sense for me to go to Next Bank at 6.5% at 99.86. Now I'm going to charge them my origination fee plus the additional basis points of, let's say, 14 basis points in this case. So I hope you understand that. So basically, there'd be a discount to the borrower of, let's say it's 14 basis points, a little less than that. And then there's going to be your origination charge. Maybe you're charging a point, maybe you're charging your full comp plan at 1.5%. So again, that's why I don't limit what I want to see. I want to see a little more than a little less. Okay. So I hope that makes sense. And again, if you had a 2% comp plan, maybe you get to that 1.5%. And now I'm looking at that level and I'm going, okay, let's get up to that 2%. Well, right here is 2% at Next Bank again, 102.009. That's essentially your exact comp plan. So you could give someone a 7.375 rate and they'd be getting a tiny little bit of a credit, or you could give them, 7.125 and they'd be getting charged 41 or 40 basis points or 39 basis points, whatever you want to say. Okay, hope that all makes sense. Let's go on to something else here. So with this, again, I don't know if you noticed this, but there's less eligible products when I change the compensation amount. So if I go to 102, it'll change. Now the eligible products are 118, right? Non-QM, there's none because they're not providing that type of compensation on this type of deal. Okay. If I left this completely open and didn't put anything in there, now it's going to bring in all the rates again, back down to this 5.75. Look at this, 533 in qualified mortgages. Non-traditional, there's 48. And I don't know how many ineligible. So let me click on the non-traditional for right now. So for one, I always like to recheck this just to make sure. And so it's going to bring up, yeah, it's just the Angel Oak ones. So Angel Oak does some weird stuff out there, but basically, if you look at this, and for whatever reason, it was a non-traditional loan. There was something weird about it. They had a mortgage late or whatever. You know that Angel Oak will do it. Well, then you can start looking at those rates of where they fall. If it's ineligible, which I'm sure there's not a lot. I don't know why Sierra Pacific is coming up on that, but we'll check that out. So there's probably gonna, let me see why I disqualified. Oh, it's because they're showing all these different products. Okay, so where I went for that. So at EPM at this 5.75, it's in the ineligible category. So you're going, okay, there's still 533 that are eligible, but there's 1740 that are ineligible. And the reason why this is ineligible is this is home possible. So because remember with the income part of it, and again, I should have explained what I'm clicking on here. This disqualified, this is where you can look at where the hits are for the pricing of the loan. You can look at why it's disqualified. So again, if I look at this and I say, why is this disqualified, this home possible? Here's the hits that would go on this particular adjustment if it was possible. But because the income is too high, it's above the 80% AMI. Therefore, it does not apply. So that's why it's ineligible. Okay. Those really only apply to, you're not going to be really looking at why something's ineligible unless it's a real low credit score or something like that. So let's do that real quick. Now, I want to mention that with the pricing engine, if you've put different borrower attributes, you've put in some property attributes in here, loan attributes, something that is affecting what you're seeing in the pricing engine, it's a good idea to just reset everything. So if I click this button over here that says reset the search, it's going to go back to an 80% loan to value. It's going to actually go back to Los Angeles, California. So it's still going to be 760 FICO score because that's the default. Okay. So as you see, Los Angeles, California, 80% loan to value, conventional fixed loan. Okay. So that's always a good idea to reset the search if you're having ineligibility issues where you say, hey, why isn't this coming up? Let's go to jumbo and stuff like that because this is a good thing to talk about. So if, again, I'm going to just reset the filters just in case I changed anything. Let's go with an 800 FICO score. the borrower has a ton of reserves. I'm going to put 24 months of reserves just to make sure that potentially some things will come in that need to come in. So 32% DTI. We're going to say this is a fixed and an arm, and it's going to be a jumbo that we're looking for. Okay, so let's do a 5/6 arm, 7/6 arm. You could select all the products if you wanted to, but let's just use that. And again, let's say this purchase is 1.5 million. So let's say this is 1.5 million. So now we're going to say the loan amount, it's an 80% loan to value, 1.2. That's going to automatically bring in jumbo. But if I said, hey, this is a 70% loan to value, it's going to bring in high balance. Okay, so that's what this thing is doing. So some of the products in here, and it's kind of behind the scenes, it's nothing that I can do to change it, but some of the products will fire off with jumbo, and most will just be high balance under this. But some will say, hey, if it's $1 more than conforming loan limits, and it's in the high balance category, we also want to show you jumbo. So anyways, let's go back to that 80% loan to value. It's true jumbo. It's 1.2 million. It's the purchase. It's primary residence, all that kind of stuff. I'm looking by all rates and prices still, all eligibility, income documentation. I would always say full. And it usually does come up automatically, but if not, I would still put the full in there because that does matter sometimes with jumbo. So if I search, you're going to get both ARM and fixed rates that are available. Okay. So as you see, 30-year fixed, 5/6 arms, and a 7/6 arm. So if I open this one up, it's going to bring in, all the different lenders that are in there. Let's go to a 99.5 because I'm going to do a borrower paid transaction. I'm going to start looking. Okay, realistically, we're at 99.953 PennyMac, so 6.625 is what I could get my borrower right now, and then I'd be charging them, of course. That's on a 30-year fixed. Then I can close that and go to the next one, 5/6 arm. Oaktree Funding is the only one that's doing that right now, apparently, at an 80% loan to value. And that's part of the reason why, because a lot of these places are only doing 75% loan to value now. So then on a 7-year arm, Plaza, Flagstar, Oaktree, others basically are doing this, okay? But I go, okay, at that same pricing level, 99.981, it's 7.375 at Flagstar, right? Is that, that makes no sense that you'd be going there on a 7-year arm instead of a 30-year fixed. So, it's more likely that you're going to want to go to, a 30-year fixed instead of an arm on this particular loan. But that's how you can kind of see the different types of availability of different lenders. And again, if you said, hey, I don't really want to work with PennyMac, I really only want to see, again, Rocket's pricing. Well, I can click on that and it's going to only bring up Rocket's pricing. So I can say at that 6.625, it's 99.5. Maybe I go, this makes a lot more sense to go to Rocket. I'm trying to get a quick close, less conditions, that type of thing. Or you give them a little higher rate and then you charge them, right? Your compensation level. So, you could get a 6.750 jumbo loan at 99.832. Now, just to show you one more thing on this, if I change this to that 70% loan to value, okay, they're putting down more, and I go high balance. Now, when I search, it's going to start looking for a high balance for the most part. It will bring in some jumbo products as well. So let's go back to this scenario. So you're at a 70% loan to value, right? 99.64. Rocket 6.5% at 100.073, basically par, and beyond and so forth. So but it's bringing in their jumbo product, right? But if it didn't and it only brought up conventional high balance, the pricing wouldn't be as good. Let's go to, actually, let's just bring up all Rocket again. I just want to look at what Rocket is doing. That's the only lender I want to send it to for whatever reason. I don't know if I agree with that. So here's a good example. So their jumbo pricing on this loan at 6.625 is 100, it's 40 basis points above par for jumbo, okay? Their high balance is 99.663. That's, high balance DU. So it makes more sense to do this on a jumbo loan. Now there's issues though with that. What if the DTI is at 50%? Well, then they're not going to do it, okay? But on a conventional, high balance, they may go up a little higher on that DTI than they would on a jumbo product. So remember, they're underwriting to whatever product it is that they're selling here. So on the jumbo side, it may be a total of 45 or 43% DTI, depending on the lender. So you can figure that out by saying, okay, now I'm going to bring this up to let's use 45. It's 45% DTI. I'm searching for the same loan again, that high balance or jumbo. And it looks like they still will do. It looks like they will do it at 45. So I would bet above 45, they stop working with on the jumbo product. Let me just check. So again, we got jumbo, jumbo, jumbo. The other one in each category is going to be high balance. As you open these things up, it's going to bring in the high balance because it's bringing up the best pricing first. So now if I go up here and I say, okay, let's go up to a 46% DTI and research. And I'm going to keep it on Rocket just so we can kind of look at the same stuff. So as you see, when I got to 46 DTI, it only brings up high balance pricing because it's ineligible under, okay, there's Rocket. Okay. So under ineligible, if you go to this disqualified, why is it disqualified? Max DTI 45%. So it's a good way to kind of see why a lender won't do things. And then you go, okay, can I modify the file enough to where it makes sense to be able to go to jumbo? Can I get it down to a 45% DTI and do it on a jumbo product that's going to be better priced and all that kind of stuff? Okay, so remember, reset the search when you're when you're searching again for something. Again, you can choose multiple products if you want to compare FHA and conventional. Okay, so let's say that you're searching for this loan. It's 80% loan to value. Let's bring it up to a 90% loan to value. We got to put in what type of MI, is it borrower paid or lender paid? Okay, so it's a 90% loan to value. It's better to go conventional or FHA. So upfront FHA is going to come in as well. On the PMI side of things, we're saying borrower paid for the conventional side. Okay, so this is a 90% loan to value. It's great FICO score and all that. Is it better to go FHA for the borrower or conventional? You're going to search. It's going to bring up both conventional and FHA. So let's first look at the conventional side of things. Okay, we're at a 101. I put that in already, 101, right? So if I had a 1.5% comp plan, I'm going to look and I'm going to say, okay, let's get them closest to par. Let's give them a little credit. 7.125 at Next Bank, 101.609. That's going to be my best rate. Okay, cool. Now, let's see, is FHA going to be better for them? Well, technically it is 6.250, 101.6. So exactly the same pricing on FHA is 6.25. But you do have to consider the upfront MI costs, the fact that the monthly MI is much higher and it's going to be there forever. This conventional one, again, at 7.125, I would probably be going to Rocket on the conventional side of things. So I'd say, hey, just give me the Rocket rates, okay? So basically at 1.5% compound, I'd have to go to 7.375. But again, the mortgage insurance would be probably a lot cheaper for my client. So I'm probably going to go to Rocket, see what directly in their pricing engine with my login to Rocket, and I'm going to see what their mortgage insurance would be as well. Because probably when you take into consideration this loan amount with a difference in rate from FHA, it's probably going to be better for the borrower on a conventional loan. But, it's good to look at both products and see which one makes more sense. But that's the way you can search for multiple products. Okay, let's go into, okay, so I am in LendingPad, not LenderPrice right now, LendingPad, our LOS system. Okay, I'm using a fake loan that's in here called Sample. And I want to price it out with the pricing engine directly through LendingPad. Well, once you have this correctly set up in LendingPad, making sure that you've gone into your profile under your name up here, and you've put in the email address that's associated with the login for LenderPrice, then you'll be able to run pricing in here. So there's a separate video on that I already made. But okay, so if I clicked on this loan, I'm going to take a look at it. It's going to be a great DTI of 16.33, has a FICO score of 809. And a couple things on LendingPad right now, just so if you're looking at this going, boy, that looks different than my LendingPad. There's different defaults that you can put in here. There's a 2023 version of LendingPad and a 2021 version of LendingPad. And I'm using the 2023 version, so it's a little different. I'm seeing if I like it better. And you can do that in your settings as well under your profile. But if I'm looking at this loan and I go, okay, I want to price it, I can go right here to this little $sign and click on that. It's going to open up LenderPrice within LendingPad. And it's going to bring in the information that I have in the file and put it right into the LenderPrice. Okay. So once it does that, it's an 809 FICO score. The DTI is 16.332, like it was in the file. Here's the purchase price of $1 million, loan amount of 550. It's a great old deal. Okay. Now, again, I like to search by all rates prices. So I'm going to select that because it defaults to something else. And then I'm going to search. Now, with that being said, again, with two systems talking to each other, sometimes there are issues. Sometimes it puts something in there and gives you ineligible results or something like that. Well, then I'd get out of here. I'd go directly to the URL, the web page for the pricing engine, and I would search again that way. It's a lot easier to do that. Okay, so it's going to take its time to go through, do its thing, and now it's going to bring in results. Again, let's say I had that 101.5 comp plan. I'm just going to put in 101 because I'm not going to limit myself. And I'm going to start looking. Okay, so it's going to bring in the results. And as you see, at each rate, there are a certain amount of lenders. There's 5 lenders here. And of the first lender, there's 2 products there. This at 6.990, there's 6 different lenders that come in. And there's 2 different products for AmeriHome. So as I open this up, you can see you got AmeriHome. 1 means that there's 1 additional product in there. Okay, so one's Fannie, one's Freddie. PennyMac, same thing. New Res, there's 3 total products, 1 being the one that's up here and 2 more that come in. Okay, Fannie and Freddie have the same pricing, it looks like there. PRMG, Rocket. So you can easily do it this way. The only thing I would say is if you're getting, not a lot of results, there might be something that is not connected correctly from the transmission of the data from LendingPad to LenderPrice, and there's not a lot I can do about that. It only occasionally happens. So those kind of things in technology are kind of hard when you can't reproduce it over and over. But that's the way you're going to look on this product as you go, Okay, so that's how you price it directly in Lender Price. And again, what you're going to do is, let's close this. You're going to go to your profile. You're going to click on profile. You're going to go to edit profile, and you're going to go to actions. And then with this, you're going to go down to pricing provider down there, and you're going to put the email address in there, and then it should work. And you got to press save, of course. So that's about it. And happy pricing. Now let's go into Pluto next. That'll be a separate video.